fine. Great. Well, welcome everybody. I am Cheryl Sikorsky, Serve Colorado's Director of Finance, Operations, and Compliance. And so I just want to welcome you all to this training. So I can't use my back button to get to the main slide, but what we're going to be talking about today are subcontracts. And this has always been a thing that is in Serve Colorado contracts. It's in the primary part of your state grant agreement. So not only is it with Serve Colorado contracts, but it should be in any state agreement that you're working with the state of Colorado. So it's not new information. However, it is going to be newly enforced. And so before we started to enforce this, we really wanted to give some backup information so you all are prepared and we can have as seamless of operation as you all have come to know and love about Serve Colorado. So, but before we dive into that too deep, I have this really terrible slide up here. And this is not related to some subcontracts, but it is related to the upcoming contracts for program year 22-23. So we have been introduced in last state fiscal year about things called buckets. And buckets are the way that Serve Colorado has decided to parse out their funds, their allowable funds from ARPA, which is the American Rescue Plan Act, shortened to ARPA. So basically, when AmeriCorps got the funds from ARPA, they said that there are 3 ways that these funds can be used. So bucket 1, as you can see here, is to increase living allowance. Bucket 2 is for match replacement. And bucket 3 is for new members or new programs. And I also indicated next to those very brief descriptions, whether or not 2% is allowed. So if you've worked with Colorado before, you know that of the indirect you all are allowed to claim, Serve Colorado takes 2% of that. As you can see here, some of the buckets are not eligible to collect that 2%. So why that matters is because when you all, especially if you were competitively funded, if you all applied for funds, you went the regular process that you always went through. You wrote a budget narrative, in which case you said, I am going to travel to this place and my per diem is this. You put all of that great detail in those lines. Well, what CNCS did is they took your budget narrative and they decided from what you submitted how they were going to put that funding in buckets. And so when you got notified, you should have seen how your funding was parsed. And again, this is very not only specific, but at this time we're only seeing it with our competitively funded folks. But when you got your announcement, you should have seen that some money was maybe put in bucket 1, maybe some was put into bucket 2 or 3. And so what's happening now is now that we are in the contracting phase, because CNCS moved those around, Serve Colorado on the back end is kind of modifying the way your budget's going to look in your contract to make sure that the funds are accounted for in the right category. And you will have the same overall amount, but because some of the funds are not eligible to have the 2%, you'll notice that we are going to be collecting less 2%. So this is all very complicated, more so than it needs to be, but we are trying to absorb a lot of that complicated nature for you. However, when we are doing that, we will need you all to review your contracts that are going to be put into Encore really thoroughly. Just make sure that everything looks really good, because there are going to be it's going to look different than what you submitted. If when you see your Encore budget, you want to talk through it, please send me an email or ask to schedule a meeting. I'm happy to go over anything with you all because it is going to look different. And then as you can see here, once your contract or once your budget is in the contract and the contract is executed, even if we notice an error after the fact, it will be a full amendment process to correct, even if it's just correcting an error. So we really want to, for everybody's sake, just get it right the first time. So with that being said, are there any questions before we dive into subcontracts?
I had a question.
Yeah, of course.
So in making the original budget, I remember there was we were discussing whether to utilize match replacement or not. For various reasons. And if if we didn't use match replacement, AmeriCorps put some of that money into match replacement, and therefore there is an opportunity to, would there be an opportunity to reduce the grantee share size if by AmeriCorps putting the money into match replacement, it like reduced from the CNCS share column, and then the match percentage is higher than required? Does that make sense?
So I'm looking at the matrix that they gave us for funding, and I'm showing a 0 in match replacement for you all.
Oh,
so
okay,
I don't
cool.
know if that is helpful. They
Yeah.
did elect to use bucket 1, which is living allowance increase. So what you will see in this instance is when we do your budget, if you're thinking about how it looks in Encore, you notice this year, if you had a grant this year, that they added like ARPA grantee columns. What we're going to do is we are just going to take, especially for bucket 1, what you budgeted in the CNCS column for living allowance, and we're just sliding that over and then reducing the 2% that we can collect. So that one is going to be very simple. If you want to explore putting match replacement back on the table, I don't know that process, but I can figure it out for you.
Okay. I think
Cheryl,
okay, thanks.
just to quickly clarify, so you're sending out the contracts, we're reviewing our budgets before we're signing, and after we've signed and submitted, then we will need an amendment for any changes, a
Exactly.
modification.
Yep. Great. Okay. It's always fun, and we're always learning something new with AmeriCorps. So if you guys have questions, we are, of course, always here to support you in the complexity that is. Great. Okay, so now on to our regularly scheduled topic, which is subcontracts. Okay, so what is a subcontractor? Per the state agreement, again, this is a definition that can be found in the main body of the agreement, also known as what everybody in the state that receives a contract from the state will see in theirs. So it says a subcontractor means a third party, if any, engaged by grantee to aid in performance of the work. Subcontractor also includes subgrantees of grant funds. So that's kind of the definition that they all use going forward of what it means. And it's pretty vague, right? So as you can see here, it's pretty broad. So let's talk more about it. So when you go on, it says in section 17, subsection B, so the grantee, you all, shall not enter into any subgrant or subcontract in connection with its obligations under this agreement without the prior written approval of the state. So again, if you are going to be working with somebody and you are signing an agreement with them, if you're entering into an agreement with them that facilitates the work in your subcon or your grant agreement with us, you will need approval before it is executed, written approval from the state, aka me, saying that this agreement is approved. So it goes on to say that the subgrant, subcontract is reviewed upon request. Go ahead and consider this our request because we don't otherwise know if you all are entering into them. So sometimes we don't ask, but consider this our blanket request. If you are going to be entering into an agreement, that is, we want to see it. And so one of the ways that I like to think about a subcontract or an agreement is the way that funds are flowing. So we have an example about this later on, but a subcontract where money is flowing from you as a subrecipient to someone else would be what we're talking about here. I know that a lot of our grantees enter into host site agreements where sometimes money flows from the host site here. At this point, it may be an agreement that you're entering into, but we are prioritizing review of all of the subcontracts where money is flowing from you to someone else, okay? So that's kind of what we're looking for here. So this then goes on to say, I'm not going to read the whole thing. I'm really only going to read the ones that are bold. But again, this is in your state grant agreement, so you can read it a bunch of times if you want. It then goes on to say that the agreement shall comply with all applicable federal and state laws and regulations, shall provide that they are governed by the law of the state of Colorado, and shall be subject to all provisions of this agreement. So why I like to highlight that piece is we have created a spreadsheet or a checklist, which we will go over during this call, so you all know what we're looking for. But the agreement is really subject to all of the provisions in your state grant agreement. And we have highlighted the ones that we think are the riskiest, sometimes the most overlooked, and kind of the most complicated, so that we can kind of have our eyes on it as well. But they really are subject to everything, even if it's not included in that checklist. So just be aware of what your grant agreement says, and kind of know how that looks in your agreement as well. Okay. We have a question. It says, do you mean service site host location annual agreement to host a member? So there are two that I'm thinking of that could fall into that. So specifically what we're talking about in regards to this is anytime money is flowing. So I think sometimes there's an agreement between host sites where money doesn't flow. It's just like, hey, you're having this member, you have to keep in mind prohibited activities. You have to ensure that the member is supervised. You have to maybe sign their timesheets. That's more of like an agreement, a memorandum of understanding, or something a little less formal. When we attach money to those things, that is when it becomes something that would cross my desk, for lack of a better way to say that. So Julia, for your question, we don't have to review every host site agreement. That may be something your program officer asks for, but for the fiscal side of the house, we're really only looking for the ones that have funding flowing back and forth. Does that help answer your question, Julia?
Yep.
Okay, perfect. Okay, so we had another question that come in that says, commonly host site agreements are part of the startup document review as well. Does this qualify as a review? So if there is money flowing and you have that agreement. Oh,
yeah,
go ahead.
Cheryl, that's me. Yeah, so if there's money flowing from the program to the host site, and it's maybe part of our host site agreement, that's what I'm asking, is because this is required in the startup documents, does that qualify as a review?
Okay, so no. So program is looking for, do you include prohibited activities? Do you include level of supervision? I'm looking for contractual terms of the agreement. And I think hopefully some of this will become more clear as we go on. I think that's an excellent question. So if it's easy enough, if you can just send it through Cognito with your startup docs and then to me, because we are then looking for separate things. Does that help? Perfect, great. Okay, would an employment agreement qualify as a subgrant, like hiring our program managers? So no. Folks that you are entering into an agreement with, they aren't a contractor. So that employee is falling under all of the typical operations of your organization. And so they are covered, they're on your liability, they are covered under the scope of work that you have already submitted to us. So we don't need to see that agreement. I see Julia said awesome, so I'm going to consider that one answered. What if a host site agreement includes a placement fee? So Tammy, when you're talking about a placement fee, are you talking, can you describe the flow of money?
Yeah, the money would come from the host site to us.
Okay, so at this time, we are prioritizing all of the agreements that have money flowing from you to a host site, for example. Is it a good practice for me to review the other flow of funding, yes. But since it isn't our money, we are less concerned with that one. So at this time, I'm going to say, yes, at this time, I am officially saying in this phase out of enforcement, we are only going to be reviewing and approving funds flowing from you to a host site or to a different vendor.
Thank you.
Of course. If you are unsure and you want us to review it, we are happy to do such a thing. It's just not a requirement as it is the flow of the other way. So we are here as a support if you want us to review it, but we don't have to review that one. Does that make sense? Okay, perfect. Okay, so again, the state contract, super broad. If you ever have any questions about if it is something, if it isn't, you can always ask. I think we got asked a really good question with one of the parties that we had started this kind of phase out with, and it was like something like a Xerox agreement. So sometimes Xerox has like great big contracts that you as an organization sign to use their machine and their paper, and you like lease their machine. We don't need to see that. Does it impact this work? Ever so slightly. You're probably paying for that with your indirect fund. I mean, we don't need to see that level. Also, likely you're already entered into it when you start this agreement. So we're really focused on those ones that you're entering into during the course of this to complete this work. So we'll go into a few other examples, but I think that one is a really notable, great example of what we're looking for and where is kind of like then over review. Great. So I'm going to move on, but I love how the questions are coming through. Keep it coming. Okay. Oh, so here are those examples. So these are ones that we commonly see. Another place to look is whether or not you put it in the contracting line of your budget narrative. So really, if you're thinking about, oh, I put this in my contracting line, I have provided a daily rate, those are kind of the agreements that we're talking about this. So here are some ones that I've seen. So again, really highlighting anything where both parties are signing. So when we're thinking about an agreement, usually at the bottom, there's a spot for your agency and their agency. Those are what we're looking for. So if you hire an outside accounting agency, then yes, we would probably want to see that because they're handling the money. You're probably paying them for the work. They're not covered by your liability. You're both signing and agreeing to those terms. So yes, typically you would see that. HR contractors, again, kind of the same thing as accounting agreements. They are billing you for services rendered to support this agreement. You probably agreed to what that pay price point is. You probably are agreeing to how many interviews they're going to help you with or how often they're going to make payroll. So yes, typically we would see that for that. Presenters or trainers. This one is a little bit up to the type of agreement that you're entering into. So this one is a sometimes. So it depends on what is signed. We have worked with both types where we needed to enter into a formal agreement and where we didn't. So we've had presenters who are like, yep, I'll do it 2 hours. I'll invoice you after, we're good to go. And sometimes they say, okay, well, we really, for my own records, I need you to sign this agreement saying you will pay on this date, that you are agreeing to this amount. And at the point that they require us to sign as well as them, then we would consider that an agreement that we would have to review. Okay. So credit card purchases, this is just a silly example to show you that it is a two-way signature. So when you are purchasing a credit card or purchasing something and using a credit card, you have to sign something, right? But the other party is not signing as well. Even though the receipt has the terms of agreement, the date you're paying for it, all of the things that would typically fall under that, the vendor, Walmart, wherever you're using the credit card, they're not also signing that receipt. And so here is an example of a translation service that we used. So I think it was something like $250. They were going to translate our ACGMI into Spanish while the ACGMI presentation was going on, which stands for AmeriCorps Grant Management Institute, if you haven't attended yet. That agreement, $250, does not rise to the level of anything Serve Colorado would need to formally purchase something. So we wouldn't have put an agreement in place. However, the party did ask that we sign as well as them, so that even this small amount of money was documented for their records. So in that case, we would definitely have needed to see that agreement. Again, it's because both parties are signing. I had a question come through that says, how about if our sub-grantees enter into these contracts? Do we need to review those, or does Serve? Okay, so let's think for a second of something that would happen. So you are the grantee.
I can give you an example, Cheryl, if that's helpful.
Great. Yeah.
So, you know, we have a bunch, I feel like this training is mostly for us. Parent Possible has a bunch of sub-grantees who are our actual program sites, who are the ones who actually are doing our program. Some of them have contracts like these. Like, I know one of our sites has a third-party accountant that they work with, and they have like consultant agreement to work with that person. It's an ongoing, you know, contract, so it wouldn't necessarily be getting signed this year. I don't know if they do annual amendments when they get new funding, but if, you know, one of our other sites starts doing that, do we then need to kind of pass that up the chain of someone somewhere downstream is signing a contract? Who else needs to see that?
That is an excellent question. So I think it kind of comes down to how the agreement is written between you and the host site. So why I say that is because if you, as the grantee, the Serve Colorado grantee, gives money to a host site, and in that host site agreement, the only thing that you are covering is payroll for members. So say the host site is paying their members that are at their host site, and the host site pays the members without using that third-party accounting service, okay? Then this work that they are paying for doesn't actually hit the agreement. However, if you, as the grantee, are paying the host site, and in that host site agreement, there is a budget, and the budget includes things such as staffing, HR, and accounting services, then for best practice sake, we probably should review it. Even if it's just that we give you the official approval, we can try that. If it seems like that is going to be too burdensome, or you're finding that that is the most common practice, we can talk about it then at that point. I would think that your agreement probably wouldn't be that specific, and therefore wouldn't rise to the level of needing a review. Does that make sense?
Yeah, that does. Thank you.
Okay, perfect. I'm happy to work with you if you're unsure. I'm happy to give you just a quick thumbs up or thumbs down. And then that way you have a CYA saying we didn't even ask to see it.
Okay,
so even if that's all you need, we're happy to provide that.
Perfect.
Cool. I think I'm caught up. Oh, yeah.
Yeah, I have one more question, just continuing that wormhole. Fiscal host is oftentimes a gray area, and I don't know how many people on this call, so this might be something we could take offline, because fiscal hosts sign the contract for the grant, and then the programmatic operations has expenses tied to that. So I think this actually speaks more to, there should probably be a more formal agreement allocating costs and exchange from the grant to the program site to manage operations, right? And then that would be submitted for review.
Exactly. So what Lindy is saying, and definitely pop in and correct me if I'm wrong, when we have a fiscal host, the fiscal host is, for all intents and purposes, the way we've been communicating on this training is that they are the grantee. Even though they are fiscally doing the work, the sub-grantee in this case, or the vendor, would be the one actually incurring the expenses and doing the work, and likely billing the fiscal host for all of the things that they've done. The fiscal host then asks Serve for the money. So in this case, I would probably say the agreement between the fiscal host and the sub-grantee would be probably very thorough, almost as if it was the agreement between Serve Colorado, or the agreement between Serve Colorado is like an exhibit to that agreement. Then what you would do is for all of the budgeted lines, that would be where you would ask for those follow-ups. So if your your sub-grantee is paying the HR contractor, if they're paying for a trainer that needs that signatory, we would probably then talk about what it needs, but likely it would need to be reviewed. Does that help?
Yes, it does. And I think another example just to throw in there is evaluation.
Yep.
So
Yep. Evaluation would be a good one.
Yeah. Okay. Thank you.
Yes, of course. Great. Those are all really good questions, and I appreciate you asking. Okay, so why are we doing this? This really sucks. And I agree. So ultimately, this is a reimbursement grant. So basically, or most of them are reimbursement grants. So what that means is that you all spend the money. We say, we agree that the way that this money is spent, then we in turn spend our money as well. Since we are spending our money, all of what we end up spending has to be covered by state fiscal rule, or else we commit a statutory violation. It's not great. I don't want to do it. And so by us spending our money, we in turn have to follow the prevailing procurement practices. So an easier way to see this is when you all spend money, we pay. And even if one of those invoices or credit card receipts or anything include tax, if we pay that tax without knowing that we paid it, we still have committed statutory violation because we as the state have ultimately been the person who paid that tax. So it's the same way with agreements. So even if you all are the person who incurs the expense and pays it, ultimately Serve Colorado is the one spending the money for it. So we have to make sure that all of the agreements still follow all of the state fiscal rules, all of the conditions in our procurement, all of that. And so it does become very tedious. And, you know, we actually have seen times where like during audits or anything like that, we do ask to see the agreement. There have been times where the state has been named in an agreement and we've never even seen it. And so at the point we could be named in an agreement because of the relationship of the work. If we don't know where we are listed, it becomes very complicated in the eyes of the law of who's actually responsible. If we are a named party and the vendor thinks that we are liable to them, and we have no idea that this agreement existed. So it's just because of the intermingling of how these relationships are, it just gets very complicated. And so for having you send it to us, we are then saying, yep, we agree, you can enter into this work that we will pay for. So it is complicated, and I can see why people are asking why. So know that that's kind of the reason there. And it's just a good practice because it is in the agreement. When we give the thumbs up that it's good to go, we are then the responsible party for having agreed to that. So there was another instance where somebody was very good and read their grant agreement even more thoroughly than I had ever been enforcing it. And they sent a grant agreement. And I said, yep, this is good, because I didn't really look at it, if I'm being honest. I was like, yep, thanks for sending. You checked that box. I reviewed it. It's good. Then when we did our audit, I saw that it was like a fixed grant and we didn't have some of the things in place that I normally would have asked about. And so when I was questioning the cost, they were like, well, this is in the agreement that you approved. We are good to go. And I said, you are absolutely right. I will have to take the hit for that. And so we are also doing this as a way to protect you all. We could have executed or enforced not paying that expense because the expense was done correctly according to their agreement, according to their practices. But because it wasn't totally in line with the way the state would have documented it, we probably could have said we aren't going to pay for that. But because they had that thumbs up from us, it protected them and we were able to reimburse them for that expense. So it does stink. But we do think it's a way to protect you all as well. And so Lindy said, I think this is a great way to also clean up our contracts. So thanks, Lindy. That is really nice of you to add. Yes. Okay, I think we are all caught up on questions. Okay. So that leads us to what are we actually looking for when we do our review? So for consistency's sake, Serve Colorado created a tool to help go through what we are actually reviewing for. We think that this is going to be a tool that really creates consistency among how grantees' contracts are reviewed. It'll give you some feedback so that when you're communicating back with your vendor, you know exactly what we're looking for. And again, it creates that consistency that every grant is following the same. Because we've also have had times where when we were new in this, we were like, questioned one part and then not the other. And that is confusing guidance. If we're questioning it once, why aren't we questioning it always and approving it once and not always? So it really is going to be a way that we can become better at our review as well. So this is what it looks like. We are going to go through this a little more detailed because it's very small. You probably can't read it. When we do send out the recording, we'll send out these slides and a copy of this checklist so that you all can kind of look at what we're looking for. You can use it as a first level review before you send it to us so that you can delay some of that or prevent some of that back and forth. But we will provide these tools out for you as well. Okay. So here are some logistical pieces of our checklist. So the maximum amount. There should be a maximum amount. If we're not knowing what the full cost of what we can do and where that benchmark is, we could very easily get into a situation where it costs just a little bit more, or there was this other thing that they didn't know they'd have to pay for, and then we are surprised. You all are surprised by the cost, and we are surprised by it as well. So listing a maximum cost kind of keeps everybody operating off of the same knowledge base. A start and end date. This is important because work cannot start until your agreement is executed. Same as with our state contracts. And by putting in a start date, you are saying work can begin on this date. That date should not be before we have reviewed it. So that is also why it becomes very important. And it should list an end date. So if you are doing accounting work, you should know that maybe it ends earlier than this grant agreement. And so you need that additional maybe 3 months left of our agreement to do the work. And so putting an end date really helps to solidify that it's within the terms of our agreement between us and the state, or us and you all, and just really making sure that, again, everybody is clear on what the expectation is. There should be a payment process description. This should be something that says they will invoice you on this date. They expect payment within 30 days is pretty standard language, that you're sending it to the right people. All of these things should be in there to protect, again, both you and the vendor for getting exactly what you want and getting paid in the way that you want. It should also list whether or not the agreement is a reimbursement focus or a fixed focus. And this confuses a lot of people. So I'm going to give you my brownie example, and hopefully that will help make more sense. So a reimbursement grant, when we are thinking about making brownies, is that a person who you asked to make these brownies for would give you a receipt for all of the ingredients. They would have some kind of log of their time that makes sense for making brownies. And what they would submit to you is the sum of their ingredient list and their time, typically speaking. But it would be, the backup would be the receipt for the ingredients and something logging their time, right? A fixed grant agreement would be that they don't submit the receipts to you, but what they are submitting to you beforehand, a reasonable expectation of what the brownies are going to cost you. So in turn, you're not paying for the ingredients and the time, you are only paying for the brownies, that end result. And so what happens in a fixed price agreement is you do the documentation work beforehand, which is how you agree on the price that is then put into your agreement. So a fixed price agreement for brownies would look something like, I am proposing to you in a statement of work that ingredients for brownies have historically cost my baking team $13, and that brownies take approximately an hour and a half to cook, and then there's some prep time. So we are saying that we think it's going to take 3 hours once said and done. So you are paying up front and agreeing that the 3 hours of time plus the 13 estimated dollars of ingredients are what you're reasonably going to pay for the brownies. Well, You agree to that, that's great. The person goes to the store and their ingredients only end up costing them $11. We'll never know that because $13 is reasonable for the ingredients per their long-term history of making brownies. Whereas even if the budget in the reimbursement said $13, if the receipt said $11, we are only paying the $11. This is really important because a lot of times our vendors are working with us after meeting specific thresholds. I spent 6 hours doing payroll this month. Or they can say, on average, it takes us 6 hours to run payroll. So this is something that needs to be stated in the agreement. So if your agreement is reimbursement, the agreement should mention the words after the fact actual expenses. And that is because we are paying only for the ingredients purchased, only the $11 instead of the $13. And if it's fixed amount, again, it should be in alignment with 48 CFR, section 16.202, subsection 2. And that lists all of the pre-steps you have to take to prove that that $13 for your fixed brownie ingredient is correct. And it typically includes previous experience, previous knowledge of how much it takes to make brownies. There's an entire checklist of what makes a fixed grant or a fixed amount valid in the eyes of an agreement. The other thing that I would say is back to the maximum amount. This should align with your organization's procurement policies. So if your organization says we run a competition for any vendor who we're spending more than $100,000 with, but you are showing me an agreement that's 150 and there was no competition run, then it may be a violation of your own procurement process for your organization. So also just make sure that you're looking at the maximum amount from that lens as well. Great. Are there any questions on this bit? Okay, so these ones could be really long, but what we're looking for here is there are certain statements in the agreement that are in alignment with state procurement, which is a confidentiality statement and a conflict of interest statement. They can be really small, or they can be the full wording that is included in your state grant agreement. I have listed the sections where you can find them in the state grant agreement if you wanted to use some of that words or know what we're looking for. The main thing for confidential information that we are looking for is that it covers confidentiality generally, that it talks about the use of the record for confidential information, what to do if there is an incident, and how to safeguard for that information. So is the agency an HR person who's dealing with member social security numbers? That would be considered confidential state records. How are they safeguarding for it? Do they keep it in a locking filing cabinet? Do they have the use of software that prevents phishing and all of that? And then conflict of interest, the statements we're looking for in your sub-agreement talk about actual conflicts, apparent conflicts, how you're disclosing that information to the state, and acknowledges that there are ethical practices in place when using grant dollars, okay? We could talk forever about each one of these, but I think our state grant agreement does a good job if you wanted to review those quickly when you're reviewing them. So insurance, okay. This is the one that trips everybody up. And again, is something that we at the state have gotten a lot more enforcing, even of our grantees, which you probably have noticed. So when we're talking about our subs, this is what we're looking for. So workers' comp should be paid from your vendor to their employees. This can be waived if the sole employee is also the owner. They don't have to pay themselves workers' comp. And then we have like general liability, aggregate liability, all of that, which is covered and what you all are expected to have. Then it gets into crime insurance. So crime insurance is required only, per guidance that I've received, only if the folks have direct access to state funds or if they are passing through the funds to a fourth party. So here's an example. You are the grantee. You have an HR contract. That HR contract also is passing the funds that they receive from you all to an accounting team through an agreement. So if our funds are ending up being something that the HR third party who you have the agreement with, if those funds are also flowing down to a fourth party, they would need crime insurance. Okay, it's very complicated. This is something that is a very weak spot for me, if I'm being honest. And so questions about insurance, I typically have to ask our procurement team and then get you an answer back about that. Okay. And so when you are submitting your agreements for us to review, we also ask that you give us the certificate of insurance as well, so we can review that. And then it does say that the state should be named in the insurance. So even this HR contract should say that the state is covered under here. It is something that we look for, although it can take a while to have another named party on the insurance. And so we have been approving it, saying that as long as you recognize that this is something that you and your vendor need to be working on, we do look for it. So have it in there or indicate that they are working on it, and that will be sufficient for us to move forward. Okay, if you have questions on that, those are probably pretty specific and would probably be a best or at the time of contracting. And again, I probably will need to ask somebody else. So if you have questions, I'm happy to try and answer them, but likely we'll need to bring in somebody else. Okay, so laws and obligations. Because we are the state of Colorado, we have to abide by our own laws. And so when there is an agreement where the laws are executed and enforced in another state, we would have to review that and make sure that the laws are those that are governed by the state of Colorado. It should be clearly listed in there. Complies with state and federal laws, that should be in there. Okay, so vendor obligations are listed. So again, an agreement really should protect both parties who are signing it. Let them know what the expectation is. So the vendor obligations should be listed. What are you as the grantee getting from the vendor for the amount that you're paying them? What deliverables, how are you measuring that those obligations have been met? And really that's the crux of the contract. It really should be, what are you getting and how are we setting those expectations? And then again, I mentioned this earlier, that there are provisions in the state grant agreement between you as the grantee and Serve Colorado. They are subject to all of those provisions. This checklist is really, again, those high risk, highly visible things that we are looking for as an initial review. But really any provision in the Serve Colorado, State of Colorado grant agreement should also be applicable to your agreement. So some of the things that we've seen, and I've already mentioned, is that, so you can list that as an exhibit to your agreement, is a way that a lot of folks utilize such a claim. We had another question that came in. Yes, so the question is, are you reviewing contracts before they are fully executed or after they are fully executed? So we should be approving them before they are executed. So you should not be entering into the agreement unless we have given you that thumbs up that you can enter into it, essentially. Okay. So review of who is doing the work. So because we are ultimately funded with federal dollars in most cases, we cannot be associated with giving funds to folks who are debarred from receiving federal dollars. So there is a way to check this. And we will be checking to see if, I think I spelled debarment wrong, but we will be checking to see and ensure we are not giving funds to folks who are debarred from receiving federal dollars. And in the same kind of vein, we also are checking to make sure that who you're doing work with is receiving a certificate of good standing from the state of Colorado. That's a pretty common thing that most businesses have, and we run that search for you as well. So you don't have to submit the certificate of good standing or anything. We're going to do that check for you. So the checklist is a tool that was created by Serve Colorado. It is not a tool created by the state of Colorado. It's intended, again, to make things consistent, and it's subject to change. So we are newly enforcing this. We have tested it out with a few of our non-CNCF funded grantees to just kind of feel how it's going to work, but we're learning as we go on. The first iteration of the checklist has changed. We have taken some things that didn't really make sense out, and we are open to learning more about this process and making changes as those come up. So just know that it is subject to change. We will try and communicate and let you know if we do make any of those changes, so that you aren't going to be caught off guard when we're all of a sudden like, no, we don't approve it for this reason we've never told you about. So we will always try and be proactive with you about any changes, because we want you to be using this tool. All right, so I have to plug in my computer really quick. So contracting is already terrible. Most people hate it, and this is another step to it, and I recognize that. And so the biggest belief is that this is going to slow down your contracting process. And I'm not going to lie to you. It might, because it is another step. However, I really want to work with you all to make this as seamless as possible. And so I have some tips on how we can all work together to make sure this doesn't bog down your process unnecessarily. So if something is time sensitive, sometimes we don't know when contracts are going to be. So you can go ahead and please use the subject line of the email where you're asking for this to really indicate that urgency to me. So you can put urgent in capital. You can put the date that you want it to be executed. You can yell, hey, Cheryl, you need to check this immediately. I don't care what you put in the subject line. Just grab my attention so I'm not causing you a delay. I don't care if we use the subject line that way. That's what it's there for. So please use it as a tool to make this process a little easier. Another thing that you can do is just review the agreement before sending it to me. If you are pre-addressing any potential weaknesses, that's gonna cut down on some time, so that I'm not seeing it and saying, hey, this date says 2022 and we're in 2023. Can you work with the vendor to change that? So then I review it, I give you that feedback, you go back to the vendor corrects it, gives it to you, you have to give it to me. That was a simple thing that could be a correction you make before you send it to me, and it cuts out some time in the review process. And then just know I'm going to do my very best to give you the best, most thorough feedback as possible. That way you can communicate with your vendor what we're really looking for, so that they aren't like, well, I don't know what you mean by that. I'm really going to do my best to say, okay, the state grant agreement that you have with us ends here, but this agreement ends way back here. Can you guys recognize that some of this work is not going to be covered by this? So maybe that's feedback that you give to them, and maybe they can say like, and we bill as work is and only bill for what's applied to the grant. So they can add in language like that. And I will always do my very best to be clear in my writing, but I definitely welcome feedback if it's not clear before you take it to your vendor, and then potentially correct it in the wrong way, and then again cause more delays. So those are some things that I can promise you, is that if you put urgent in the subject line, I'm going to do my best. With PERs, we know when those are coming in, so we can set aside time on our calendar to make sure we're reviewing those promptly. With these subcontractors, I can't promise that I'm going to review them or have time dedicated to. So if you're using the urgent subject line, I can then prioritize and clear some time to make that review. So I will promise you that I will do my very best and not delay your process. And you can definitely let me know if I am causing delays. Can I fix it all the time? No. Is it helpful for me to know that as well? Also, yes. I want this process to be as seamless as possible. And I know that there is going to be some learning curve to it as well. Okay, so timing expectations, a little bit talked about this, but it's difficult. I can't say that every review is going to take me 3 hours. Some contracts are 3 pages and some are 30, and that will definitely change the amount of time it takes me to review them. Also, I kind of indicated as well, I don't have as much lead time to clear a calendar for something like as I would for PERs, which are predictable. you know, it may be that I'm in contracting season, and so it's a little harder to move my things around, but using that subject line will tell me really how I need to prioritize it. And again, I want your feedback. This is a new process. And really, we are going to have some learning, some changes that are going to be happening for probably a year while we really see how this is going to go. And so I just ask for your patience as we're developing it. I do want it to be the best that it can be. So give me that feedback. I have a thick skin. I want to have good practices in place, but the only way I know to make changes is if I'm hearing your feedback. So never hesitate to give me that, the good, the bad, and the ugly. That's the only way we're going to get better. Okay, and so this is a final important point that kind of gets to your question, is the approval should come before executing the agreement. Work is not eligible for reimbursement unless Serve Colorado has approved it. So we are checking if your agency submits a PER and there is money being requested in the contracting line. Louis and I are working closely to say, hey, there's a contracting expense. Can you say that that contract was approved? And I will say, yep, it's approved, or no, let's work with the grantee on that. And so that may mean that if you start work on 7/1 and I haven't approved the agreement until 8/1, any work that your vendor has done between 7/1 and 8/1, even if it's executed, we may not reimburse you for. We will try and use that sparingly because this is a new process. But let's just stay in communication. That's the best way that we're going to get through this and make sure all of your expenses are going to be eligible for reimbursement. But just know that we really should be approving it before work and expenses begin incurring. Okay, so we are here to help you guys. We know that this process is new. We know that it can be time consuming. We know that contracting is already stressful. You can call me. That is my cell phone number. You should be able to reach me. If you can't, leave a voicemail, or you can email me. Whatever it takes to get this done, I am very happy to look at anything, review it, even if you don't know if it's going to rise. I'm really happy to look at things, and I want to be there for you. So call me, beat me, any way you can reach me. I'm here for you. So that is it's easy peasy, right? I mean, it's like nothing. It's the work you all are already doing. It's going to be so easy. I can already tell. We're just going to fly right through this. We are going to have the best timing. Everything is going to be perfect. You'll see. So I appreciate you guys hanging out with us today, learning this new process. Again, give me, you can call me Kim Possible. That is great. You guys can reach out to me anyway, and really looking forward to this next step with you. So, all right. Thanks, everyone.
Thank you.